This is Danny Gould with the Gould team, selling Silicon Valley. Welcome everyone to another Silicon Valley market snapshot for the second week now in October of 2019. Lots to share with you guys, some new information, some new heat maps that we've never seen before on this channel, and I'm really excited to go over this with you. Some interesting things are happening right now in the space, and I think it's important to distinguish and differentiate the idea behind pending sales and buyer appetite and closed sales and buyer appetite, because those two things are inherently different. Just because a home goes pending doesn't necessarily mean it sells. And we're starting to figure that out. We're starting to find that out the hard way here in Santa Clara County. So I did want to go over some closed sales statistics with you for the month of September, since that's the most recent month that we have aggregate data for that month. But before we go into all that, let's look at the county statistics like we do every single week. If you notice, and if I could get rid of this glare, that'd be amazing, right? If you notice here in 2019, we've, for the last couple weeks, been negative year over year in the single family sector, and significantly outpacing where we were last year in the condo townhome sector, right? Well, if you notice, we're at 638 active condos and townhomes, which is actually less than we were, and this is normal for this time of year to see the numbers start to wane in the active sector. We've reached a point where we're actually fairly close to the condo and townhome sector active inventory levels, and we actually have more pendings than we did at this time last year too. So if you're a home seller in this market right now, this should be fairly good news for you, because truthfully, up until a few months ago, it looked like it was kind of gonna go south for a lot of condo and townhome owners, and truthfully, we have come off that high that we experienced in 2018, but things are more predictable now. They're more stable, they're neutralized, stabilized, whatever word you want to use. The truth is that we've reached a stasis, we've reached equilibrium here in Santa Clara County, and we've reached it both in the single family sector and now the townhome condo sector. It would be interesting to note though, is if the single family sector continues to behave the way it has, we could see a bit of a resurgence in a seller's market here for sellers. Negative 8% year over year. A few weeks ago it was -1, then it was -3, now it's -8 year over year. Still not monumental differences, right? Just 100 homes less at this time last year, right now, than there were at this time last year. But if this delta continues to increase, and we're seeing this in the double digits, that could be really good news for home sellers. For single family home sellers here in Santa Clara County. Now, that's the macro data. Let's look at the micro, because as we know, just because things are looking good overall in the county, truthfully, there are a lot of areas where things are still a little sticky if you're a seller. And that hasn't changed. The story that does change almost every single week is where that ebb and flow is taking place in, because there are some areas where, for a few weeks things are going really well for sellers, and then things tend to scale back. And this, from a theoretical perspective, kind of makes sense, right? If you're a buyer and you're reading all these front page headlines about, the market crashing, the stock market collapsing, the world imploding, naturally, when you have to go up against multiple offers and pay, $20, $30, $50, $100,000, $200,000 more than list price, which is still the case in many areas. We just sold a listing last week in Cupertino where we went into six figures. We went 6 figures over the list price on a $2 million home. So think about that. There's still bidding wars going on every single day here in Santa Clara County. And that will continue to be the case. But the second that activity starts to become the norm in any single area, what's the buyer going to do, right? Well, they're going to think back on all the articles that they've been reading over the last I don't know, 6 months, 12 months about how the world's imploding, and then they're going to say, oh shoot, well, should I really be doing this? They're going to take a step back and likely go to another area, right? They're going to go to another area where the inventory is higher, right, than it was last year, and then they're going to be like, oh, well, there's more opportunities here, and there's less buyers here, so I'm just going to go there, and they get a house, right, and they get it right away. But then, 50 other buyers follow suit, and they all come to this area, and then and then there's that ebb and there's that flow. So I think, I hope, from a theoretical perspective, you understand why this is the case, why this ebb and flow continues to occur here in Silicon Valley, and I don't think that's going to go away anytime soon. Now, is there a way to game it if you're a seller or a buyer? Yes, kind of, but not really. Everything is week by week, but if you have this data, if you have the most relevant data on the day that you're making the decision, then yeah, you can make a more educated decision. But it doesn't necessarily mean that you're going to one-up someone else, because truthfully, in any transaction, what you must remember is that the buyer needs to be willing to pay that price, and the seller must be willing to sell it for that price. And if those two people don't meet eye to eye, then a deal isn't going to get done, period. Regardless of the market conditions or what the data says or what anything else says, at the end of the day, if a buyer doesn't want to buy or a seller doesn't want to sell, it's not going to happen, right? Let's look at the heat maps, though. So as you can see, yes, there are more active listings in some areas. However, in many areas, less active listings. Remember when a few weeks ago in Santa Clara, it was well in the negative. Now it's plus 81. So in a month time frame, it's completely done a complete it's done a complete 180 in Santa Clara. However, in other parts of, especially here in South San Jose, East San Jose, and in the mid-peninsula area here, Cupertino, Sunnyvale, heading up into Mountain View, etc. Those areas, less than normal inventory, less inventory than last year. But up here in the central part of central Santa Clara County, we're seeing higher than normal, or higher than last year's inventory levels. Now, when you compare that or juxtapose that with the pending listings, my goodness, plus 174%. in Santa Clara, plus 174%. So that additional inventory is being absorbed, and then a lot more. But if you're a home seller, and by the way, if you're a seller or a buyer and you want access to these maps, I know that this isn't that great, right? Just call me, text me, email me, all my information. You have all my information. If you're watching this video, you have the information. It's either in the YouTube link, or it's in the email, or it's on my Facebook page, or it's somewhere. So you can find it. But email me, I'll send these to you, and then you'll have them at your disposal. But when you look, it's really important to look at this on a weekly basis and just kind of understand what's going on, but don't take it as Bible, right? Don't take it as Bible or gospel. That's as Bible. Don't take it as gospel. Because truthfully, yeah, there are more pendings year over year than there were at this time last year. But that's been the case for, at least in the single family sector, for, God, I don't know, like 2 months almost now, where we've been up in the pendings or very close. And perhaps nominally under last year's pendings, like a few percentage points, right? But what I'm about to show you may not make sense to you. What we have here is the closed sales for September of 2019, the heat maps for just central Santa Clara County. Sorry, folks, if you're in the Mid-Peninsula or in South County. All we have is for central Santa Clara this week. Look at this. So look at all these areas that are in the negative. Now, if you may recall, in August and in September, a lot of these areas were in the positive in terms of pendings. So where is the disconnect? And why is this the case? And how did these closed sales how does this closed sales data impact you if you're a buyer and or a seller? And why are the closed sales so much lower than the pending sales? It's a great question. Well, pendings don't necessarily equate to closings, right? Just because a home goes into contract doesn't necessarily mean it closes. And so what this data seems to imply more than anything else is that a fair amount of homes, a far greater number of homes than last year, fell out of contract during the escrow phase. And this is not uncommon, especially in this type of environment where there's so much uncertainty. Buyers will find reasons, either psychologically, something will happen that causes them to remove themselves from the escrow. Sometimes they lose their deposit, sometimes they don't. It just depends on how the deal was structured, how the contract was negotiated, etc. But you have to believe that this just doesn't happen by accident. There's a lot of areas in the red. And so how does this impact you if you're a home seller? Well, first of all, if you're selling your home and you have this information, you should be very, very aware of not just the price that you sell your home for, but the terms, because in there lies many, many opportunities for the buyers to get out of the contract without paying you or leaving a dime of their deposit to you, the home seller. And so you really need to make sure that you dot all your I's and you cross all your T's, and that you verify that A, the buyer has the ability to close. You'd be surprised how many loans are falling through right now, because sellers and listing agents more often than not are not doing their due diligence on the buyer. Like, they're not making sure that the buyer can close. And let me tell you, it's not that hard to figure out. All you need to do if you're a listing agent is call the lender. And it takes me about 15 seconds to realize whether or not that lender's full of shit. And pardon my French. But you can figure out, deduce whether or not the buyer is going to close in a fairly quick amount of time. Like, you verify the funds, you talk to the lender, make sure that they're, not blowing smoke up, whatever. And then call the other lenders if there's multiple offers, and then go back to the seller and say, hey, look, just based on the financials here and talking to the lender, I think this buyer is a little bit more certain. And it's amazing what a little bit of due diligence will do. But here's the other thing that people may not really fully come to terms with yet, is that appraisals are coming in low. And as you're probably aware, when a home sells and it's a financed offer, the lender's going to send an appraiser out to the property. Well, if the home doesn't appraise, what's a buyer to do? Well, if they have an appraisal contingency, they are certainly going to try and renegotiate with you, Mr. Seller. And if you're not willing to negotiate, well, guess what they're going to do? They're going to walk away, and they're going to walk away without leaving a dime of their deposit, because the appraisal contingency keeps them safe. And so, yeah, you might be sky high, Mr. Seller, on how much your property's worth, but guess what? That's what it was worth in January, February, March of 2018. Not what it's worth today. And so you're going to find out the hard way that the market doesn't care. The market doesn't care that you have the shiny brass knobs with the shiny kitchen countertops and the shiny this and the gold and that. It just doesn't matter. At the end of the day, the appraisers, their job is to make sure that the buyer is not overpaying, or that the bank, rather, is not overpaying for the property. Now, it's the buyer's prerogative. If they want to make that extra, delta up with their cash, then by all means, mazel tov. But that barely ever happens here in Santa Clara County. Oh, not barely ever happens. I'm sorry. That barely ever happens right now in this environment. I'm not going to say that it never happens that the buyer won't cover some of the delta. That's fairly common. But for a buyer to come up the full way with their appraisal contingency, the chances of that pretty much zero, unless you're in a multiple offer situation. Now, if you're in a multiple offer situation, do yourselves a favor, counter out the appraisal contingency. If the buyer's serious about it and they know they have competition, then that should be no problem whatsoever. And at the same time, you should probably be thinking about helping them or having your agent try and figure out whether or not they can counter out that loan contingency as well. Now, it's a case-by-case basis, but the truth is that if a buyer's ready to buy and they are motivated to buy and they're in a multiple offer situation, you should be countering out that, at bare minimum, the appraisal contingency. So that's what it means for you if you're a home seller in this market or if you're a buyer. Now, if you're a buyer, know your rights, right? Know what your rights are. If you're not facing any competition, come in with those contingencies. Never give away a contingency for free. And that's what I tell all my buyer clients when we're making offers, is that if we don't have any other offers on the table, then sure, Mr. Seller, if this is what your home is worth, then okay, well, we're gonna negotiate, and then we'll keep our appraisal contingency. And if the home doesn't appraise, well, guess what? We're going to renegotiate when that appraisal comes in. So, and that's the bottom line. That is why there are so many homes falling out of contract right now. Hope that gives you some context. Let's move on. So, days on market, again, neutral market. This is the kind of behavior that we expect to see for the time being until it really stabilizes and we have, data that's over 12 months old. Because right now what we're looking at is from last year to this year, things were still moving quickly, right, in Santa Clara County. By the time we roll around to say next February, March, April, if we're still seeing this drastic of a increase in days on market, then that will be telling us something, right? Right now, what this tells me is that buyers are taking longer to make decisions, and it's very obvious why. There's more to choose from. There's more uncertainty. The market is stabilized, and people are taking their time to make decisions. Period. There's only one area, Evergreen, in which this is not the case, and we'll see if that trend continues. But I'll tell you one thing. I know Evergreen, and last year at this time, it was dead. So the fact that the days on market is lower this year, not super surprising, because you're not comparing it to much. I mean, it was a pretty not so great time, I will say, to be an Evergreen home seller last September. And really, guys, there's a bunch of other heat maps. If you guys are interested, we can go over that. We'll go over it next week. But I definitely wanted to drive home the closed sales for you. That is very important. We need to continue to monitor that because until sellers and appraisers see eye to eye, there will continue to be a drop-off in closed sales. There will continue to be that pending to close, like, not catastrophe, but like that, just a very off-putting amount of transactions falling through. And so the take home for you as a home seller is to make sure that you're doing all the proper verifications for your buyers. Protect yourself, and if you're a buyer, know that this is the kind of market where you can go in there and be aggressive with your terms, way more aggressive than you've been able to be in the past, and the data's here to prove it. So anyways, guys, this is Danny Gould with the Gould team selling Silicon Valley. Catch you all in the next Silicon Valley Snapshot.